much credit, specifically Powell. Why? Because he had an event today, his own, not a Fed event, and he had a speech. And whatever he said, I don't know what he said. I know hindsight. During the day, I didn't. Caused a spike, and the spike played out and then retraced lower completely, and then played out again and made a higher high, close towards the high of the day, not quite at the high. But the surprising part was, if he was trying to calm the markets down with his words, he had the opposite effect. So markets were up, S&P up 1.3%, the NASDAQ is up maybe 2%. So it wasn't a negative reaction for what should have been negative words. So my take, inside the inner circle where I had 350 traders live watching my screens like you're watching them now, these are some of the screens they're watching. We had more going on. This is the S&P right there. And if you want to see, these are 30-second charts, just to set the tone. Rally, gave it all up and then some, new low of day, back a new high of day. So to make a point, I did not listen to his words live. Nobody, we did not have them playing in the background. Not knowing what he said, I shorted the market here, suggested people can get long below the lows into this support zone, and cautioned people shorting and said, expect a new high of day if this and this happened, and indeed this came. So how could we navigate so successfully if he was in control? He does not control anything except one thing, basically. He tries to crimp the cash in the economy when he wants to, and tries to let it loose using very crude tools. And the current tools he's using is something with the balance sheet, rolling it off. And the other one, the high profile one, is raising rates, right? So he can only control the overnight lending rates. So, and how come I can still buy a car with 5.5 interest rate? So if the market really is afraid of him, they would jack up those rates and run with him. So he can't just keep on raising rates. And he may have already broken the economy. So the goal of this video is to demystify Powell and his words and refocus our attention as investors and traders on what really matters: the actual price action, the actual reports from the economy through companies like Amazon and Netflix and all of these companies are telling us the economic reports. Don't be slaves to the headlines. The headlines elicit emotions. Every time I get emotional, I make a mistake in trading. When I trade lucidly and I just go by the facts and figures, I do much better. So last week, the Fed raised interest rates. He's been saying the same thing for months, but the market is interpreting it differently. Anybody expecting him to say, I'm done raising rates today, is crazy, because this is not a Fed event. He's not going to make policy outside of a Fed event days after he just had a Fed event. So if he wanted to say that, he would have said it last week. He didn't. He raised the quarter point, as expected by most people. So they also left the door open last week, and he repeated it today, that they will do more if they need to. So he should stop, but he will probably raise another quarter. He said he's on course to continue raising much higher and much longer than he expected last year. Not a lot of people are listening. So I would ignore him completely. I'm listening to what Amazon is telling me. Amazon, the mother of all growth companies, is delivering very meek growth, single digit, a couple of quarters in a row, I think. If it delivers a shrinkage next quarter, I would be concerned that he's already broken the economy. So if I was him, I would stop and let it seep through and see if we can get a report from the GDP that actually scares him. All right, so he's used the word disinflation. What that means, it's a change in the actual rise of inflation, not lowering inflation. So make sure you know that it's not deflation. Disinflation is a change, a drop in the rate of increase. So that's what he's looking after. He can't erase inflation the way it is. All right, so enough talking a lot about him. So what can we do? If he continues to break the economy, we're going to find ourselves in deep bandini. So if you're old enough to look back through the periods of time where the economy really got broken, like the Great Recession, the Great Depression. So not a lot of people trading now do remember that. So hopefully he's not waiting to see tangible evidence to where it's already too late. That's why they say the Fed always overshoots. because they use clunky measuring tools. Okay. So as a trader, I don't have to worry about what they say. I'll give you a very simple example. In 2016, he was raising rates as well, and then he changed his mind because the markets crashed. Well, the markets were about half of what they are now. So we thought it was the end of the world then. It wasn't. So leaving the market just because of Powell fear is probably panicking out of a potential opportunity. So in our group, I do write-ups every day. I've been focused, and videos like this every week, 8 minutes, and I share them. The goal is this week, ... And when we were falling out of control, my goal was to keep us calm. So for 2 or 3 weeks, the company goal, as I call it, the inner circle goal was to find stabilization. We did. The next week, I said, we need to make some progress. We did. The next week after that, we made a lot of progress, which we did. So the 5th week, I said, we need to just retain some of the progress. So in other words, I was expecting it to dip. It never came. We dipped and we held, and then we kept on rallying. And the mode for those 5 weeks was buy the dip, buy the dip, buy the dip, buy the dip. So we bought every dip we can, and however way we do it. It was NVIDIA, it was Apple, it was Google, it was Amazon for sure. It was even crappy stocks like SoFi, crappy stock action. Bitcoin through Bito, which you don't need a crypto account for, real crypto. So we were buy the dip, buy the dip, buy the dip, because everybody in the media was scared because of Powell. We said, forget Powell. Let's focus on what Amazon's saying, and Apple is saying, and Microsoft is saying. So we were brave enough to overcome the emotions from the mainstream media to focus on what matters, facts and figures. The charts are facts and figures. So there's no lie in this one. If I go to a daily chart here, so the breakout is right here, and they dipped to confirm the breakout, and in the next couple of days, if they come back and take the high from a couple of days ago, they have room to skyrocket. I'm not saying go out and go long all in. I'm just saying the mode is to buy the dip, regardless of what the fear is. The VIX, which measures volatility, it measures volatility like 20 days out, not now. And this is the level of comfort that market makers have. 28 days out, they're super comfortable. The VIX is under 19. Its average value is 19.6 or something like that. So it's like 18.5. So the market makers are comfortable out in time. So unless we get a new headline that freaks people out, the mode is to buy the dip. So if the S&P falls into 400, guess what I'd be doing? Buying the dip. Guess what I did today? I bought the dip in 2 things. So it said, I don't want to chase. There are 2 things that fell into support. I said, you know what? I'll go buy the dip, one of which is Amazon. So you need to be careful with those words because it was a specific trade for a specific period of time. But divest yourself from the fear that the media tries to put in. They're not evil. That's just how they make money. Would you watch a show that says, you know what? Not a lot of things going on right here, but watch, maybe you'll have fun. No, they'll say, you can't believe that this and this and this is happening, because they need to make a mole out of a mountain. A mountain out of mole. Molehill? You know what I mean? They make a big deal out of nothing because there's nothing going on. So markets price things in advance. So when everybody was talking about recession, the first time anybody uttered the word recession, the market has already priced it in, on its way. By the time everybody says, yep, we definitely had a recession, which is 30%, 28 to 33%, depends on which index you look at. I'm not too concerned with what Powell says. If we don't have a new major headline, I'm still looking for opportunities to be long. I'm the guy who said from last year, we could still make new all-time highs in the first quarter of this year. Maybe we do, maybe we don't. I'll take it one line at a time. This looks like a breakout. The small caps, which by the way don't have mega caps in them, broke out from here. So the target is slightly above here. So taking this out would take us to here. So tag teaming bulls. The most important thing is that we're done. We're leaving this descending channel that started 2021 fall season. We went sideways enough. If we take this out, that would kind of be the official, okay, we're done falling. Let's work on higher lows and see if we can have an ascending channel for about 6 months or so. That would be nice. So I don't load up all longs. The point of this video is to get you back in, or not to get you out of the game because you're afraid of the Fed. He's not that important. All right. Good luck out there and be safe. Be tactical. Take trades for reasons, not willy-nilly.